So, hello and good afternoon. I welcome you to today's special webinar, how to trade the market opening of the US markets. My name is Jens Klatt, and I'm exclusively presenting this format to you here for JFD brokers. In fact, it's a little unfortunate because the thing is that yeah, how can I say this? Today is no U.S. market. It's closed. It's Thanksgiving in the U.S. And so all in all, we could have seen this yesterday already. You might have seen it that here there wasn't such a volatile market environment at all. So I'd suggest the following. I really appreciate it if you ask all your questions on all assets you want in the chat box here, and I will answer those questions. So whatever asset you want to have a look at, if it's FX, if it's equities, if it's commodities, doesn't matter. Just let me know, and let this whole event here be a little interactive. Because, as already said, U.S. markets, I think we have not such a huge and spectacular day today. In fact, we don't have a day at all since it's Thanksgiving and U.S. markets are closed. So I could easily show to you the setup we could have traded today, but not sure whether this makes really sense or not. In fact, what I will do, by the way, is here's the setup, so you can easily screenshot here this screen and then try the strategy yourself. There's one thing I do usually. It's I work with a minimum range here. So my range currently has to be 0.2% of the current S&P 500 reading. So if the S&P 500 trades at as currently 2,600 points, I usually want to see a range of at least 5.2 points. And that's funny. So usually, 1 second, please. You can read here in the chat box. That the event hasn't started yet. It hasn't started yet, but I think it has to do with the fact that you have to update the site here. And yeah, so the funny thing is that was by the way not such a bad idea. Have a look at that yesterday's setup here, yesterday markets. I can show you the chart. It's here. This is the DAX, by the way. DAX is in fact really volatile. I'm really surprised to see that. So yesterday, we can have a look at this a little later on. Very volatile in the morning. So usually the open range, if we have a 40-point open range, then you usually say that the market is presenting itself quite volatile here. In the morning here, we had an open range of over 70 points. The market, didn't break below 12,900 points, but moved higher, pushed significantly above 13,000, then dropped again by around 100 points, just to push back now 50 to 60 points. So in fact, the DAX is presenting itself currently very, very volatile, which is surprising. In fact, it's really surprising because usually you expect, due to Thanksgiving and the US markets to be really calm and volatile, to see the same thing in European equities too. So it's really, really surprising to see so much volatility in the DAX. But before we talk about the DAX, let's have a look here at yesterday's opening range. In fact, volatility pushed below 10 yesterday before today's Thanksgiving. And in fact, the trading range over the whole day was around 6 points. So if you look here at 2,593.5 here, that was the low. and the high was made right at the first candle, 2:30 p.m. GMT. That was 2,599.25. You can see that the overall trading range for the whole day was 5.7 points. So if I look at a minimum range of 5.2, then you can imagine that yesterday there was no setup, not for me at all. In fact, it wouldn't have worked out so well. But for example, the day before, that was here on Tuesday, we had those 5 points already here in the first the 5 points already in this first candle, and in fact we traded here the breakout long with a break above the high of the open range. So you can, by the way, that's why not? Let's do it that way. So the setup itself, it says, let's come back here to the slide first. Define the open range between 2:30 p.m. and 3:15 p.m. GMT. That said, it means that we look at the high and the low of the first 45 minutes of trading. And in this case, so you have here the low at 2,589. One second, it's here. By the way, why do I have those horizontal and vertical lines here? That's very simple. The gray lines here, they show me the spot open, or the Wall Street being open here from 2:30 till 9 p.m. GMT, and the green line. The green line is the low from the day before. In this case, by the way, it's not true. No, it's true. In this case, it was the low of this day, in fact. So we would have to put it down there. We won't do this right now. The red line is the high of the day before. So usually this is the day before yesterday. So that's why I haven't changed it, since today is closed and there's no trading taking place. So that is the reason why I just take out here, well, why you find the lines at the high and the low of the day before, just to make sure that you are not irritated. So then you have here the turquoise line. This is the first tick at 2:30 p.m. GMT. That is the first tick when Wall Street opens. And the blue line, the deep blue line, is the close of the day before. And that's it. And now let's come here to this open range of the day before. So you take the high and the low of the first 45 minutes of trading. By the way, let's probably use. I believe that makes more sense. Can you see this? I hope so. Yes, but I think it's fine. Okay, so you have the high and the low, and then you do the following. If the range is wide enough, meaning in my case 5.2 points or bigger than that, you go with a break in direction of the identified advantage. In this case, that means that we are trading above the this yellow line, which is the 10, the exponential moving average 10 on a 50-minute time frame, and then we trade in direction of the break, which means in direction of the identified advantage. So meaning if we're trading above that, we are only trading the long side. If we're trading below that, we are only trading the short side. So in this case, it means we are entering the trade with a break here to new highs. So we were triggered right at the next candle here, obviously, when the market broke to new daily highs, placing the stop at the low of the range, and then having or holding the position for the rest of the trading day since 10 minutes before the market closes. And that's all, in fact. That's the whole setup. It's the whole open range setup I trade, or how I trade the US market opening. And while you know might say, hey, is this really profitable? Can this work? Since it's really easy, everyone can trade this. You can easily automate the strategy. Yes, in fact, it is profitable. And I can show this to you with a chart which was created from one of my colleagues, with whom, where is it? 1 second. I just have to see. Why do I have? Okay. So here's the chart. I held this presentation, or I held a presentation on the strategy here several months before, and one of the reasons why I made this screenshot here is very simple. So in fact, he had some internet connection issues and problems, and so I just screenshotted his screen just in case he was his internet connection is lost, and in fact it took 30 seconds or so, and then he was gone. And I could easily take over here and present this to the audience. And I never changed the screenshot, so you can easily see it's definitely a screenshot here with those let's call it rough lines. And this is the strategy if you backtest it for 7 years, so till November 2010. It's different market conditions. And you can see that you have a hit rate here, the win rate of 47%. You can see that the average profit, average loss has a ratio of 1.3 to 1. And in combination with the hit rate here of 47%, you can find out that the expected value is 8 cents. You can expect to make 8 cents per every euro, dollar, pound, whatever you risk here. So in fact, the strategy itself proves really, really profitable. There are times when the strategy works really good, but there are also times when it doesn't work at all. Just imagine the following. Just imagine you're trading a strategy here between this time frame. So it's December 2014, and here is April 2016. So somewhere in between here is 2015. And now imagine you're trading it from the beginning of 2015, and then you just see this happening here. And it nearly takes 1 year to pull you to new equity highs with this approach. If you're only trading this approach, you will get completely mad at looking at your equity and seeing that nothing really seems to work here. Even though the thing is that it's not just 1 year to trade the strategy, but you have to trade it over and over and over and over again and just keep on trading it. And here, in fact, the mental stability comes into play. But you can definitely see that the setup works. It is very easy. It is easily duplicable. You have clear and clean rules. You have no real choice, no real chance to manipulate any parameters. Well, you can definitely manipulate here the exponential moving average 10, probably make it to 20 or so, even though the overall result is still very stable. And you are definitely, let's call it, ahead of the pack, just because you have a clear and predefined set of rules you just follow and live by. And if you know that what you're doing works, and works fine, obviously, well, the thing is that you have the needed confidence and just go with this strategy. So how many times did you probably see a guy telling you, hey, just give me a ring or send me an email or whatever? If you buy my online education course, you will get something like, I don't know, 5 strategies for free on top. The thing is that I'm not saying that these strategy probably won't work. So most of these guys are definitely giving away strategies which do not work at all. But there are examples out there where the strategies work, in fact, and where the strategies are proven profitable. The problem is if you haven't proved or haven't proven that the strategy is profitable, if you really do not really know what's in the strategy and which advantages it tries to capitalize, you definitely have a problem. The strategy can be profitable in the long run, but after, let's say, 5 losing trades max, you will just throw it away and say, okay, it doesn't work. In fact, when we started out here with the series of these live trading sessions and discover the tactics of Pro Trader, we started out with this strategy. And in fact, the first 4 webinars, I gave away setups and they all didn't work out. After all, nevertheless, the overall result during these sessions we have here is profitable. So we made money, and I'm doing this now for around 6 months. So that said, I mean, it clearly shows and perfectly shows and illustrates how important it is to really build a high level of trust in the traded strategy, and especially work it out yourself and really know what you're doing, why you're doing this, why you're doing that, and then just go with it. Even though there might be times when you just go crazy about the performance of the strategy since it doesn't work, or there are long periods and stretch times when it doesn't work. Okay, yeah, that's it on the strategy. So you can see that this in fact works out really well. And one second, please. Okay, so that's it on the strategy. So as already said, we won't trade it today, not because I don't want to, or I don't trust it, but we won't trade it today since the market is just closed. You can easily adapt the strategy, by the way, to other assets. You can adapt this, for example, with slightly changed parameters, respectively ranges here to other markets, and easily adapted to those markets, like the DAX, for example. If I trade the DAX here, that's, by the way, one thing I present every Monday and every Thursday, as today here, in the DAX long or short. So today we didn't trade this setup here, since the setup I presented was a short setup. When we had the DAX long or short in the morning, that was here. As you can see, we're significantly trading below 13,000 points and had already broken the lows here in the DAX of yesterday, which was, by the way, really surprising to me. I will probably, yeah, why not? I will tell you something on a trade I had on yesterday. In fact, it was a short trade. And if you look at this development, you might say, wow, you made some serious money yesterday. Unfortunately, I didn't. But I will explain this to you a little later. First of all here, so if you look at these numbers, at those lines, you can see that it's slightly adapted here. It's not the same picture as you've seen here in the S&P, but in fact, the purple lines, they are the open range, the high and the low of the time frame between 7 a.m. GMT till 8:05 a.m. GMT. And the exponential moving average I'm using here is an exponential moving average 50. It's not 10, it's 50, and it's a 5-minute time frame. So this is what I mean by adapting the strategy. And why do I do this? I'm trading this setup here for, I don't know, 5 years, 6 years, and even longer than that, but 5 to 6 years that it's proven that you can see me, especially in the German-speaking trading community, presenting trading-related content here. And you can always also see those purple lines, respectively the turquoise line, which is the first tick at 8 a.m. GMT. This is when Xetra opens, the spot market opens. The deep blue line, you can see it here. You have to zoom in a little bit here. That is the last tick yesterday at 10 p.m. German time, so 9 p.m. GMT. And yeah, so in fact, the setup is the same, or the structure of the setup. So you're saying, well, I'm trading the break here in direction of the identified trend, meaning if we're trading below this blue exponential moving average here, well, we're going short. If we trade above that, we're going long. So the setup itself wasn't triggered in the morning, but in fact, the DAX turned around, pushed back above 13,000 points. But yeah, but as you can already imagine, this is easily duplicable to any other market. You can also trade the Bund future with this, for example, also working out really well. You have to slightly adapt it. You can do the same for the Dow Jones. You can do the same for the NASDAQ. You can try it in equity markets like Apple, for example, or Google, or Amazon. The thing is that obviously you have to have deep markets and you have to have high liquid markets. So don't try this here with penny stocks or that stuff, but work with real markets, or not with real markets, but with markets who have a certain level of depth and liquidity attached to it. You can also adapt this, for example, to the currency markets, FX markets. You can work with something we call the Asia range here, where we say we use the range between 1 a.m. till 7 a.m. GMT, and then trade the break out of this range here in direction of an identified advantage. So as you can see, those breakout setups, they are easily duplicable. That's the first thing. You can somehow, most of them, you can automate them. Why is it important to automate something? It's not just that you don't have to work yourself anymore. Just click the button and leave the strategy trading here without taking any action at all. But most of it, and this is mainly or the most important aspect here, I think, while you're automating the strategy, you can do a back test, for example, through the MetaTrader. If you automate it here in MQL4, for example, with an expert advisor, you can run a back test, and you have several possibilities here to check certain parameters. Question is, do you over optimize that way? That's always something you have to keep in mind. But you can also get an overview for a quite long period of time here, if you have enough data, to see how the market performed, the strategy performed under several market conditions, and then not just seeing different market conditions, but also seeing the hit rate, for example, seeing a clear so-called payoff ratio. This is the average winning trade divided by the average losing trade, and all this. And this is really, really, really important, in fact, because it builds confidence and you start to really trust the strategy. And this is what is really, really important. So now let's come back here to another approach, completely different, and in fact, also a little unfortunate, since if you double check the MetaTrader here, you will find out that there's some data missing for whatever reason. So I'm using a German trading platform here, and for whatever reason, they just cut out 4 hours of trading. And in fact, the market moved as high as 13,170 points here. But it doesn't really matter, to be honest. I just want to give you some insights in my trading. So I have no screenshots of this, but there's a systematic approach. I'm trading myself. So for my clients, I'm a money manager. So I'm having a managed account. So far, doing really well. Just a very, very small drawdown, and with focus especially to give a stable stream of income, let's call it. So make sure that I try to generate something like 1% on average per month for my clients, and really focusing especially on the drawdowns and a preservation of capital. This is what's the first target of everything, above everything. And so here in the DAX, I'm trading. I think I disagree on this. No one trades a 5-minute chart. 5-minute charts are for rookies. I think I disagree on that. So first of all, I could prove that I'm profitable and doing this for quite a while now. And but I think I get your point. I can get your point between the lines. So you're mainly talking about especially, I think, high frequency trading, and saying something which is definitely true. The lower you go in the time frame, the bigger the chances that you'll focus a high frequency trading algorithm, which has, in fact, definitely an advantage over you. Nevertheless, I could present you one guy. He's also here. It's a German located guy. And he's also living in Berlin, by the way. And I met him again, so we know each other for quite a while. I met him last week at the biggest trade fair here in Germany, the so-called World of Trading in Frankfurt. And he's trading the order book. And he's doing this in stocks only, and he's highly profitable. And when I say highly profitable, this guy is crazy. I haven't seen something like him before. So in fact, I haven't met someone like such a high profitable guy in person before. When I worked as a trading assistant here for a very big stockbroker in Germany, I've seen several guys doing what he's doing in stocks, and especially in illiquid stocks. So this is a complete different trading approach, and nothing, especially not for rookies and newbies. And you have to have a deep knowledge of the order book structure and everything yourself, deep or a high level of experience. But let me tell you a story. So just imagine the following: you're sitting there at a stockbroker, and you are doing market making, classic market making. So we're not talking about doing this with CFDs and that stuff, but really being a broker, providing the market liquidity in illiquid stocks, so-called, yeah, well, we also traded penny stocks and that stuff. And so these guys who are real professionals here on this topic, they are from time to time, well, I'm not sure whether they can still do this today, but I think it's similar. It's at least similar. They do something we call arbitrage. And there are several stock exchanges also here in Germany. And they get different bids and different offers here. And now and this is what we did manually. I mean, we're talking about the time that was 2005, 2006, which is 10, 12 years ago. And this is today is still considered old school. So while we were already using computers, we weren't and weren't screaming at each other. Nevertheless, doing this manually today is just ridiculous. So nevertheless, you are sitting there, and then you see the orders of the traders out there, and then you have to to give a quote here on stocks, illiquid stocks. And the moment you put in the quote, and sometimes you just type in the quote and you say, let's say it's €1 to €1.10 or so. Let's talk about penny stocks, and you just get a hit on the bid or on the offer. You just know you got screwed, and you know that this was a professional based on an ID. You can usually see from which broker the order came, and there were just two brokers who were connected with their ID, were connected to professionals. And so what I can say is those guys scalping the order book, they can be highly profitable. And also in the lower time frames, if they really know, if you really know what you're doing. And there are plenty of guys out there. So just saying that everyone who's trading a 5-minute time frame, I mean, I completely agree. Most of the time we're talking about traders who are not profitable in their trading. I think there's a saying, it's a rule of thumb in the broker industry, saying 90% of the people lose 90% of their money in 90 days on average. This is 90, and it's definitely true. I've worked with a broker in the FX and CFD industry before I went out on myself, and today work as a self-employed person, as a trader, trading coach. I'm giving webinars, market research, and that stuff. I had a look behind the scenes, and I can definitely say, yes, it's true. It's 90. It's definitely true. And most of the people just lose money, even though those guys who really know their stuff, they will make money, and they will make plenty of money out of this. As this guy I just described here, whom I met here last week at the Word of Trading again, is proving day in and day out, in fact. Yeah, sure. If I have heard of Paul Rotter, yes, I haven't met him, but I've worked closely together with one guy who. Okay, this is now the thing where the daughter of the aunt, her uncle, and the friend of him. But so it's not just that I heard about him, but I worked together with one guy who was the head of trading for one of Rotter's former chief traders. So yes, I've heard about him, and he was flipping the order book here in the Bund future. There was also, I think, around 2000 or so, and I think I'm not even sure if he did it in the Bund future, but I think it was the bubble. So it's not 10-year bonds, but at 5-year bonds. But yes. I'm not sure if I get you right. If I can show this live, if my doing and trading is profitable, yes, sure. So you can check this on my website. 1 second. So it's jk-trading.com, and this is usually for, so it's in German, so it's not in English. But here you can see via performance, I've translated some of the websites here, some of the pages in the background, and then you can see here the Union Jack. If you click on this, you get also the performance in English, and also some information on how you can invest, performance, and about me. And so here, this is the performance so far since the invention of this managed account. Yeah, but this is definitely something. In fact, so this is always a very important question, but something I'd like to emphasize here. I don't think that it makes sense to show the performance of oneself or look at the performance from others. But at the end, you have to really know what you're doing in your trading and become profitable yourself. So even though I can prove it and all that stuff, that won't help you in no way. And this is something you already wrote down here, right? You say you're not going below a 4-hour chart. The question I have here is, so what are you focusing on? 4 hours is something I usually and always connect to FX trading. For example, when I trade FX, I'm more a discretionary guy here. So my approach then is a combination of fundamental, technical, and sentiment approach here. So, for example, one example which took place here in Euro Canadian dollar this year, I really I can remember this trade since it was highly profitable trade, in fact, for me. So there was a very interesting structure developing. The market was trending higher and had already seen a significant acceleration on the upside, and it seemed as if there was a kind of exhaustion here. So that was the first technical sign. And then there was a very interesting development here. Unfortunately, I don't have a chart here. It's because the website I would usually use now somehow does not update the charts with the commitment of traders report data anymore. But you can believe me that here, when we were trading around those highs, that was, by the way, shortly before an ECB decision. The commitment of traders report for the Canadian dollar, for example, showed the highest net short exposure ever on record. The market has never been more short the Canadian dollar, the loonie here. And so what I was looking for was just a trigger event, which will then result in a sharp move lower here. And by the way, we're talking about the daily chart. So when I'm trading FX, so this is just an example. And in fact, it worked out really well since there was, I don't remember her name anymore, but she mentioned something in terms of potential rate hike here. This potential rate hike, in terms of the Canadian dollar, by the way, since then, we've seen 2 rate hikes, one in July and the other in, when has the second take place? I don't know. That was the first one in July, and I think here, yeah, it was September, I'm sorry. September was the second one. And this triggered some serious action, bullish action in Canadian dollars, so pushing Euro Canadian dollar lower. And the combination of the sentiment here, plus the exhaustion from technical perspective, and then the fundamental driver. I was betting, by the way, on the ECB being more dovish here. And in fact, that played out already. But the real driver came then from this comment I hadn't on the agenda here. But the only thing I knew was the market was heavily short Canadian dollar, meaning if there's just one trigger event, then usually Canadian dollar has a good chance to see at least a sharp cover move, let's call it. And this, for example, something which is really discretionary, but something I would never ever do in a time frame below 4 hour. In fact, I prefer to go to the daily chart here. So I think it highly depends on what you're looking at. But there are definitely profitable strategies, especially for retail traders in lower time frames. For example, the guy I was referring to here, he said, well, he has several requests from guys, and he can prove that he's highly profitable. I mean, he just turned, I think, a 10 grand account, I think he initially started 12 months ago with a 10 grand account, and to him it was just a challenge. So he's trading. Usually he's trading way bigger, and he said, "Hey, I have a challenge here. I want to prove that I can make ends meet by just trading a 10 grand account here." And he traded it up to something like, I don't know, 80,000 or so within 12 months, which is tremendous. And now the thing is that he said, hey, Jens, you know what? My target now is to do the same thing again, and then probably once again. So probably I just got lucky, but let's just try. I will take out all the money above 10 grand and then start from new here for the next 12 months. So then he gets requests from several retail traders and people who say, hey, would you manage my money? Do you offer something like copy trading also? And the only answer is no, I don't offer this. But it's not that I don't want to offer it, but I just can't, because the edge here is very, very small. Respectively, liquidity is not enough. We are talking about highly illiquid stocks. And even though you probably want to duplicate this trade to, let's say, 100,000, 1 million, whatever, you just can't, because it's only, let's say, 5,000 in terms of volume available here. And what did I say that? Yeah, okay, and that's one of the reasons why, for example, there might be retail traders, retailers. I mean, who's considered to be a retail trader? When I say, hey, I'm trading 5 million, would you say I'm a retail trader? I would say yes, definitely I am. But institutions just laugh about me and say 5 million. Well, this is what we usually put on in terms of risk when holding a position here. For us, this is nothing. And so this is exactly the point. Institutionals who usually trade way bigger can't really capitalize on this. Really can't capitalize on it, and that's one of the reasons why a retail trader with a small account can be highly profitable in the lower time frames, while a big institutional guy can't. Okay, so now, but let's come back here to where do you want? Yeah, I know. Let's come back here to yesterday. So just let me give you an example here. So yesterday, for example, I was short, and in fact, it turned out to be a profit. It was a nice trade. So I'm not really I'm frustrated about this. And I took out the position when the market didn't make significant new lows. Oh, by the way, this is horrible. 1 second, please. I have to see. There's data missing. I just don't know why. Okay, what about Xetra? Yeah, okay, that's okay. Even though we just don't see what's happening here after 5:30 p.m. German time, so 4:30 GMT, because this Xetra, and it closes here at 4:30 p.m. GMT. We can see here the bounce. So, in fact, I was short from somewhere here, a little higher, in fact, somewhere here, probably, and so the market moved in my direction. Then it came back. I was fine with that, and then it made slightly new lows. And now remember, today we have Thanksgiving. Again, usually it is that it's usually the case that such a day, especially when U.S. markets are closed the next day, that usually, especially the DAX in this case, liquidity thins out in the afternoon, and yeah, what's happening? It thins out, and we don't get to see big moves again. So in the last weeks and months, what you could have seen is that, especially if the market dropped, for whatever reason, the market just pushed back. It just pushed back, and yeah, traded at the initial level where it already started to move lower, respectively, probably is turning green. And that was something I had on the agenda yesterday. So I had on a trade. And then I said, you know what? I take out the position. It was somewhere here, not really. I think it was 13,122. So the lows of the day were at 13,112. So it was 10 points above the lows. And then you see this move here in the afterwards, so something like 2 hours later, and the market is nearly trading 50 points higher. And for me, the day was done here. So I had nothing on the agenda anymore. I was done in terms of research. I was done in terms of trading. Everything was fine. Nevertheless, I wrote something at the computer, was still working. And then you look at the chart and you just see the market dropping. And it starts to accelerate on the downside. And it still accelerates even more and even more and even more. And now we can go back here to here. Okay. So that was 13th, 530, small stabilizer, boom, and we dropped below 13,000 points, and no one really knows what's happening. In fact, still, I just don't know what happened. And if someone out there has an explanation for that, I'd highly appreciate it to listen to it, to hear about it, because I have to say, I was really surprised, especially because, and now let's have a look here at the Dow Jones, for example. Nothing happened. Okay, so we were stabilizing around the all-time highs, slightly pushing towards new all-time highs, and then coming back a little, something like 100 points. But we're not talking about a big move. That wasn't even 0.5%. It was nothing. If you now look here, for example, at dollar Japanese yen, you might say, okay, that was a risk-off move, right? Or it has to do something with risk-off. You've seen the same in gold price, for example, gold pushing higher. So looking at the gold price here, you can see that here, at least this candle yesterday was bullish, even though the overall picture is still very choppy. By the way, if I had to bet on one direction, I'd somehow say that we will test those lows and break below 1,260 before probably seeing some gains and a move back above 1,300 USD per ounce here. Into the yearly close, probably in the beginning of next year. Reason for that is, by the way, that at the end of December, we start to see a usual bullish seasonal pattern here in gold. But so you look at dollar Japanese yen, you think, okay, some kind of risk aversion is coming in. You look at gold, okay, gold ticking higher. It was not a very aggressive move, even though you could definitely see that gold was pushing higher here. Obviously, there's also some data missing. And so somehow you come to the conclusion, okay, if you look here at this development, it must be something like risk aversion, but the US equity markets don't play the same game. Volatility is below 10, the VIX in case of the S&P 500. So meaning all in all, there's something wrong, even though you just don't know what. And now some might say, would you do the same again? Yes, I think so. And the main reason why is simple, because it has been too many times that the market didn't show us such an action here. And in fact, if it's only happening once, similar to, I'm not sure whether we get enough data here, but you have probably seen the squeeze in Volkswagen. That was 2000 and, can we get there somewhere? No, 1 second. I'm not even sure. Probably it's not Vorzug, but it's probably Stammaktien we have to look at. That's unfortunate. 1 second. Let me just see. Okay, there was a squeeze up to 1,000. No, it's, by the way, no, that's not even the right chart. 1 second. Let me just see. There we go. Yeah. Isn't that a funny move? Isn't that a funny move? Yes, it is. What happened here? So there was some mergers and acquisition talks. And back then, there was a speculation that Porsche will take over Volkswagen or the other way around. And so you will see this candle now and you think, wow, that was a quick get rich quick scheme here somehow. The only thing is this happened once. You can see it here. So if you zoom into the chart, nothing happened, okay? That nothing like that happened afterwards and not before. So this is just one event here. I'm not saying that something what's happening here in the DAX, or that such a scenario here is similar to what we've seen in the DAX yesterday. That's not what I'm saying. But the thing is that we can say here that such moves do not occur often enough so that we can capitalize on them. So why do I say that? Because I would do the exact same choice again if I had to. Because, and as you have seen here, the market just pushed 50 points against me with no real with no real outlook for such a move we've seen then here yesterday because of Thanksgiving taking place. And in fact, this is one thing I'd recommend to people when they focus on trading strategies. For example, like this here, okay, simple trading strategy. You have clear, clean parameters. And they show you which positive expected value to expect. So it's a basic strategy if you want. The basic strategy is profitable already. So what's your target as a trader? Your target as a trader is to trade the strategy and try to optimize the expected value. In this case, for example, meaning, and therefore let's go here into a little more details. Look with the editor. So the expected value multiplied with the average winning trade hit rate, you subtract the average losing trade multiplied with the loss rate, you get the expected value. Okay, so, and your target is to have a positive expected value, meaning you're making money out of every trade you're doing. So now you have components showing you that, for example, the hit rate here is 47%, meaning the opposite is 53%. It's the loss rate. You know that the average winning trade, for example, is 1.3, while the average losing trade is 1. So I've already reformulated this here, 108 divided by 0.82. And so now the thing is that based on these components here, you can calculate what to expect on average in terms of a winner and what you can expect in terms of a loser. So for example, if you know that your average winning trade is 1.3 and you're risking on average 1,000 euros, so in fact losing on average 1K, you know that your average winning trade is 1,300. And now the target is very simple. You somehow try to increase this number, let's say to 1.6, 1.5, 1.6. You might say this is not a lot, but in fact it is, because you're not trading this strategy once, but you're trading it over and over and over and over again. Meaning the number of trades here with 1,347 show that if you're capable of trying to make winning trades bigger than they used, then you should expect them to be, while making losing trades smaller, that here you will get a more profitable result, making an already profitable trading strategy profitable, even more profitable. And this is in fact what trading is about. That's, for example, one of the reasons, and also that was a nice discussion I had. And by the way, this chart here, or this graphic, I screenshotted it when I held a webinar together with a guy called Stefan Friedrichowski. He has a PhD in physics. And you can imagine this guy to be really quantitative in terms of trading, even though it's not very complicated what he's talking about, because he has a very, very a great way to explain very difficult topics in a very, very, how can I say that? Easy way, in a very easy way, yes. And so when I was talking to him, he always looked at me and said, you know what? I think it's always very funny when someone asks me what I think about the DAX, because I really don't care. I really have my system, I run it through, and that's it. And I know I have a positive expected value. There we go. I will make money trading this over and over and over again. And if the DAX goes long today, or it goes short, or it stays neutral, doesn't move at all, or let's say, for example, it's the US market is closed today because of Thanksgiving and market holidays, well, I really don't care, because here in the long run, I will make money. And the thing is, and this is why I talk about this, is the thing is that you really have to learn to trade and to think in terms of expected value. And if you do this, you will definitely come out ahead, and in fact focus on complete different topics. So for example, there are days when I'm coming out ahead with my trading, but nevertheless I don't feel good at all. And the reason for this is very easy, because I know that my expected gain here was not hit, or that what I made or took out of the market today, that it was below what I usually have to expect in my trading. Then I have to start to think about, okay, did I do something wrong, or was it probably the market which did not behave the way I needed to behave to be more profitable? If it's the latter, everything is fine. If it's the first and I made a mistake, this is where I then step in and say, okay, why did I do this mistake? And I write everything down and then analyze it. Same is true for losing trades. If I have a losing trade, it can be that I'm really happy, a really happy guy. So I had a premium session with my German clients, and in fact, it was on Saturday, and I had a losing trade on Friday. And I told them, hey, I lost yesterday, and I was really happy. Why? Well, I knew that on average, for example, my average losing trade is 700 euros, but yesterday's loss was just 300. It was more than half of what I used to expect here in terms of a losing trade. That was a good trade, a very good trade, because I found out on top of that, that the reason for me showing a smaller than expected loss was because I intervened in a very constructive and very, very positive way, and had the right opinion, but also the right access system. First of all, the right system, and then the opinion. And that was the reason. It was skill-based why I came out better than expected. And so this is something I highly recommend here, and to look at trading that way, because this is what at the end makes you even more profitable, and leads to become a better trader, and in fact a professional trader with a professional attitude here, and really trying to intervene at places where you can intervene, and where you can take a positive impact on your trading, and not trying to somehow call the direction of the market if the market goes up or if the market goes down. Okay, so okay, so not sure. Yeah, I don't hear anything about entries or exits so far in this video. Yeah, that has one a simple reason. So I'm not sure when you tuned in, but I'd really like to give you a setup for today. The only problem is U.S. markets are closed, and since this is was planned to be a covering of the U.S. markets open, and unfortunately I didn't didn't have a look at the calendar, and I just didn't see that today will be Thanksgiving. Today, U.S. markets is closed, so we do not have a setup. And even if the market is open, by the way, very similar to yesterday, even if the market was open, doesn't necessarily mean that we are having a trading setup, since I need the market to at least form a range here of 0.2% of the current index reading, meaning it needs to see a range between 2:30 p.m. GMT till 3:15 p.m. GMT here of at least 5.2 points. So if it's below that, I do not have a trading signal. And we made this a topic here already. So I'm showing the idea behind this. if the market opens, I'd wait tomorrow. Tomorrow it's open, yes, but we have only market open till 6 p.m. GMT. I'd start to trade it again from Monday onwards. Then this is the setup here. So, and this is what you can build here. You can see the setup on in terms of the entry points, respectively, the stop points here. Okay. You mean is this a question for me? What are for those lines? I thought you were in the discussion here with Roger Oswald. So you were. I thought you were talking to Roger here. So what for are those lines? Those lines here. If the question is for me, I've already explained this. So what I usually do is, so this is for yesterday. You can see here that this is 3:30 p.m. GMT. I'm sorry, German time in this case, so 2:30 p.m. GMT. And here it's 1:21, so 9 p.m. GMT here. So this is when Wall Street is open. So this is when the spot market is open. The green line is the low of the day before. The red line is the high of the day before. You can see it here. So that was for yesterday, in fact. The blue line, deep blue line, is the close from yesterday, and the turquoise line is the open price of today. So in this case, in fact, it's not that right. It should be here. So this is the first. No, I'm sorry. It's a red candle, so it was right. So you look at the first candle, at the first tick, and then this is just to orient me, so that I know where we're trading in relation to the open. Respectively to the close from yesterday. And the yellow line is the exponential moving average 10 on a 15-minute time frame. Yeah. So I hope that this answers the question. And yeah, so in fact, that's it from my end. As already said, I'm somehow a little sorry since yeah, it's Thanksgiving, it's bank holiday in the US, so no setup is presented here or is triggered. And I'd say, yeah, have a nice evening. Happy trading. Watch your stops. If you watch from somewhere of the US, then have a nice Thanksgiving and enjoy your turkey. Yes, and yeah, so that's it from my end. So yeah, as already said, have a nice evening. Happy trading. Watch your stops, and talk to you again then next week on Monday in the morning meeting, latest at 10:30 a.m. GMT, exclusively for JFD brokers. Yeah, and I look forward to it. So talk to you then. See you, and bye-bye.